Good evening, and thank you so much for joining us on our spaces this evening. The title of our conversation is What SMEs Really Want from Insurance Providers, and I'll be hosting James Kamau, the Group Head of Distribution at AR Insurance, and Kirinya Kithinji, Director of Strategy at Wild International. My name is Terry Antibet, and I'll be the host of Mwango Spaces tonight. Just a brief introduction of the topic and the aim of the spaces. We aim to unpack the realities behind low insurance uptake among SMEs in Kenya and explore how providers and the ecosystem as a whole can better align insurance solutions with their real needs. A little bit about our host, Mwango Capital. Mwango is a research company that leverages digital media to share information on East Africa's financial markets. Mwango seeks to inform investors about what organizations and firms do to help them digest company financials and business news. Of course, this is done through rigorous research and high quality productions, as well as narratives that are based on facts and opinions from experts. In addition, Mwango sends out a newsletter that's called the Mwango Weekly every Monday, and as well as hosts Mwango Spaces Tuesday, Friday, and also send out Mwango memes every Saturday. So if you don't already follow those hashtags, please do. And also follow at Mwango Capital here on Twitter and on other social media spaces as well. I'd like to welcome James, the Group Head of Distribution at our Insurance, to tell us a little bit about what you're looking forward to this evening and just a quick overview of what we can expect from you as an insurance player in the SME space. James, let's start with you and then we'll go to Kithinji.
Good evening, everyone. Thank you, Rian. Thank you for the invite, Mwango Capital. It's an honor to be here once again. My name is James. I serve as the Group Head Distribution at AR. AR is a leading insurance provider in East Africa. We do both health and general insurance, and we lead especially on the health side. We have quite a bit of experience in dealing with the SMEs. And as we hold this discussion here this evening, we actually the leaders in SME insurance within the region. We have quite a lot of experience that we would like to share with the listeners this evening. We also would like to hear their feedback and the contribution of everyone here. As long as we are increasing insurance penetration, we are always happy to participate.
Kithinji, will come to you now. Just some few opening remarks, and perhaps you can tell us a little bit about the report that has informed our conversation this evening.
Thank you very much, Terian. My name is Kirinya Kithinji. I serve as Consulting Director at Wild International. So Wild International is a management consulting firm that pretty much works with small and medium enterprises, especially the ones that are owner-managed. We've been around for about 21 years, working with SMEs, especially in the area of strategy, although there are other interventions that we have. Basically, we publish these reports every year. And last year, we chose to focus on insurance. But really, the focus is usually about how the SMEs interface with third-party suppliers like insurance companies. We even done a report on access to finance and maybe strategies. So the SME sits at the center of the report. And we're really glad that we're able to collaborate with AAR in this conversation.
We'll now get into the meat of the conversation, and James will start with you. According to the reports that both of you have alluded to, 53% of SMEs do not have any insurance cover. Tell us, what does this reveal about the current state of SME insurance in Kenya?
Indeed, it is quite concerning that 53% of SMEs do not have any insurance cover. And this means that billions in terms of value of assets remain unprotected. And in the wake of any adversity, the losses would really be huge and direct to the owners themselves. It's also very worrying because all the report insinuates is that a whole 53% of the entrepreneurs have not even protected themselves in terms of health. Now, the question begs as to why this situation would be. And the first factor that I would place this on would be the low-level awareness. We have embarked on various campaigns to create awareness amongst SMEs Interestingly enough, on a daily basis, we deal with quite a number of SMEs. And these are the intermediaries that sell on our behalf because they fall under the category of MSMEs. And the next thing is affordability. We are continuously looking at lowering the cost of accessing quality insurance, both the general and health. And the third is accessibility, where you may be desirous to buy insurance, but you do not know where to source it from. I want to inform this gathering that at AR, we have a diverse range of distributors. We have about 2,000 agents. We deal with about 200 brokers. We deal with most major banks. You can actually walk into any bank branch and request for our insurance. And there is an increasing participation by various insurtechs, whom we have also partnered with. The fourth factor will be relatability. Do the MSMEs relate with the solutions that are out there in the market? That would actually be creating a gap where they don't see it as a real solution to any adversity that may come to them. So what we are trying to do ourselves is to listen and craft solutions from a listening point of view. We have very many forums with SMEs where we do a lot of listening. We do carry out our customer service index. So there's quite a bit of feedback that we receive and craft solutions based on that feedback. The fourth and the fifth and the last is attitude towards insurance by the SMEs, vis-a-vis other traditional method of mitigating when it shows well. And that some of these traditional methods may include coming together in chairmans as SMEs, and whenever something happens, we come together in the spirit of Harambe, and we assist a member. We go for circle loans. Sometimes we even pray about it and hope that really nothing happens. And that relates to the first point that I made. It's all about now creating awareness so that more and more SMEs come on board, and we don't leave a lot of assets unprotected. We don't expose entrepreneurs who hide deals should they fall sick.
Thank you so much, James, for quite an in-depth overview of what the space looks like and what the challenges could be or the pain points, and also for pointing out that sometimes we just resort to prayer. But hopefully by the end of this conversation, we'll be able to bring the nexus and share with us some of these solutions that are available for small businesses. Kivinji, let's come to you now. This report offers quite a rare and data-rich lens into the insurance behavior of SMEs in East Africa. What gaps in the SME sector inspired Wild to take on this research?
I'd like to say that our work with SMEs, especially the ones that are owner-managed, where the owners are both owners and managers, spans over 20 years. And then because of this, of course, we've observed and we keep observing a number of gaps with the SMEs that we work with. So these reports, like I alluded to earlier, have always been SME focused, which in a sense means that we publish such reports from the perspective of the SMEs. And there's a report coming out every year on some topic or the other. So the report that we are discussing today takes the standpoint of the relationship between the SMEs and the insurance industry. In other words, we really just wanted to know, what do SMEs think about insurance and not what insurers think about SMEs. So it's pretty much, we are taking the standpoint of SMEs. So we also know that SMEs must necessarily work with partners, external partners, to succeed in what they do. And these partners, of course, can be businesses like themselves, or they can be government, or even other partners. We always think it is good to occasionally ask the SMEs what they think about those partners that they work with, that are necessary for the success of the organizations, alongside many other issues or gaps that they face. So this report, of course, is the fourth one. And the first was on strategy. And then we've also done a report on access to finance. And then before, in 2023, we did one on retirement planning. Just to summarize, what we're trying to say is, in the course of working with SMEs for over 20 years, of course, we've noticed certain patterns and certain things that matter to them, and certain gaps that matter to them. And now, speaking of the report in particular, we think of these reports as a service that we render to SMEs so they can make better decisions when they're working with certain partners, and also when they are taking a look at themselves in front of a mirror to see, I think we have this or this or this defects. Just to confirm, or to summarize rather, that these are gaps that we notice as we work day to day with SMEs.
Thank you so much, Kithenji, for painting that picture for us. James, I'll come back to you. Now, while 77% of insured SMEs feel that their coverage is adequate, the report also highlights a lack of understanding of available insurance solutions. So how do you balance perceived adequacy with the need for deeper education and awareness?
Terian, it's quite true that while that number of SMEs may feel adequately covered, there is a need for them to understand the solutions even better. What I would say is that we really need to be intentional in terms of taking our message to the SMEs. At AAR, what we are trying to do at every instance, we have budgeted for it and created the right partnerships, such as with the Wild and Sandbox and even other organizations. So we always have forums with SMEs. A month hardly passes before we sit down with SMEs and exchange ideas and listen to them as we pass on the message of insurance. The other thing that we try to do, actually, part of what we do, it's part of our product offering, is member education. So for every SME that we insure, we intentionally arrange various sessions with, say, the employees of that organization so that they can be able to understand what the cover entails and the benefits, the do's and don'ts of the cover. What we try to do at AR is not to be prescriptive, even in the process of product design. We collaborate as much as possible with various stakeholders so that the product that comes off is appreciated by the various stakeholders. Our current SME solution has gained a lot of popularity. It's well consumed by the market, and it's actually one of our fastest growing lines at the moment. We have invested in empowering our intermediaries through training. We do through our marketing. We do a lot of product campaigns where people are able to interact with our messages and they can raise queries and what have you. But even as I conclude, let me mention that the language that we use is quite important so that we avoid highly technical language and process it and make it as simple as possible to understand. If you notice our billboards now, which are within Nairobi in different locations, we've tried to come to the level of SMEs using language that is easy, identifiable by especially young upcoming entrepreneurs.
All right. Thank you so much, James. And of course, we have seen some of the billboards you're talking about. And it is, as you say, an important factor to ensure that the language that you use and how you communicate to entrepreneurs is in a language that they understand and identify with. So thank you so much for sharing that. Kithenji, I'll come to you now. Based on your experience in supporting SMEs, and you've given us a bit of a background to Wild and how you work with SMEs, how would you describe the mindset of today's entrepreneur when it comes to preparing for risk?
Generally, there is still plenty of room for taking the matter of risk seriously, and especially how we choose to manage those risks at the enterprise level. But that said, I think SMEs tend to think of risk in a very narrow sense, in the sense of actual loss. For instance, I'm going to give you an example. Maybe you're a dairy farmer and you're thinking, what will happen if I lose my cows? Maybe because of flooding or lack of pasture or something like that. But the other thing about risk that is forgotten, and maybe that's a big one, is a loss of opportunity. So there's an actual loss. I've lost my cattle, for instance. I've lost my dairy cows. But there's also the loss of opportunity. That's always a risk when it comes to SMEs. And we have to think about that as more often, and we could do a lot better as SMEs to think about the opportunities that we are losing, not just in terms of the losses that we may incur. For instance, in that example of a dairy farmer, what if the dairy farmer is unable to take advantage of a huge rise in market demand because he didn't know about it? So there's a loss of opportunity side of it, and then there's the loss that we are familiar with. But I also think it's important to take into account that once you decide to set up a business, and this is an important point, you're already stepping into the space of risk. The other way to put it really is a decision to go into business is also by default a decision to take certain risks. And I would say this, a typical SME is both a bundle of risks and a bundle of opportunity. A typical SME is both a bundle of risks and a bundle of opportunity. Now, if that is true, then the difference in approach to risk becomes whether you are aware of the risks that you face as an SME, whether you're exposed to those risks, whether you're vulnerable to those risks. People ask me, what's the difference between exposure and vulnerability? Exposure simply means that the risk has come to your doorstep, so to speak. But vulnerability is different. It's come to your doorstep, but maybe your door was not opened. Your door was open, or you forgot to lock your door. So are you exposed to the risk? Are you vulnerable? And then, of course, do you even think about the impact when the risks materialize? And of course, my colleague James has alluded to that. I want to say this from our experience. We've noted that if you're running an SME, the first port of call should be to establish the risks that are inherent in your business model itself. Like we said, an SME is a bundle of opportunity, and it's also a bundle of risks. So are you aware of those risks? So your first port of call when it comes to risk management for your business as an SME owner is to think that the risk that I'm exposed to just because I'm running this particular business model. Anything can go wrong as far as the business model is concerned. Maybe you can make a mistake around the needs that you're serving, around the clients that you should be serving. You can make a mistake on your value proposition. You can make even a mistake on what will take to deliver the value proposition. So you can see. Then, of course, there are the other things that you don't have control about, like pandemics, locusts, and things like that. So I have one more point to make. From where we sit as a entrepreneurship support organization, we have also seen that the owners of the SMEs can be the biggest source of risk by the kind of decisions they make or they fail to make. So maybe before we look at their businesses as a source of risk, we may also want to look at the owners, especially how they make decisions in their businesses. Now, our experience of working in SMEs is owner managers or owners of SMEs don't usually make decisions based on data. They make decisions based on rules of thumb, trial and error. And of course, in the extreme case, there is error and error. So how they make decisions. Now, that decision-making process and how they make decisions can be a huge source of risk. So we are saying your business can be a huge source of risk if you get certain things wrong. And also, how you make decisions can be a huge source of risk. And then on top of that, outside of yourself as a business owner and outside of your business, the one that you're running, there are also things like pandemics and locusts and flooding and things like that. The other thing that I think I need to mention before I conclude is that it's important to know what the SME owner decides to do once he's fully aware of the risks that he's going through. So I'm talking about how they choose to manage risks that they're aware of. I'll give you an example in conclusion, as I conclude. I'll give you an example. It's a well-known fact that the chances of being involved in an accident when you're driving increase 5 times when you're talking on your mobile as you drive. The chances of being involved in an accident increase 5 times if you talk on your phone as you drive. Now, here's what I want to say. We observe a lot of those behaviors as we move about our business up and down in our Kenyan roads. Now, those same guys are the ones who are running enterprises. What do you think they think about risks?
Oh, wow. Quite some challenges to us there. Thank you so much for sharing that. I'll come to James now. With costs cited as the biggest barrier to uptake, how is our insurance working to design and deliver insurance solutions that specifically meet SMEs where they are without compromising value or sustainability?
We are in the year that we are marking 40 years since we were founded. We have collected a lot of data with time. We can actually tell the various trends, say, of various diseases. We have the average costs of various costs related, say, to various diseases and hospitals. So we have our own internal data which we have collected over time. However, we even strengthen that further by doing a lot of research. We have partnered with one of the largest research organizations in the world to support us with the real situation on the ground. There's a product that is quite popular in the market today. And we did a lot of research actually going almost to a whole year before we launched it. And when we did, there was little surprise because it met the expectations of the market. So indeed, value is important to the customer, and sustainability is also very important because it's one thing deriving customer value and another for us to be able to sustain the same level of benefits at that particular cost. But also another aspect of cost is now how we pay. And the law prescribes that we do cash and carry. That means that if you require insurance, you will be given a quotation, for example, and if the quote comes to 10,000, you need to pay that 10,000 for you to derive the benefits. However, there are always ways that are innovated so that we can be able to make payment of insurance a little bit softer. So one of the ways is insurance premium financing. Today, you can easily walk to your bank and arrange for financing of your insurance premiums. For example, that 10,000 shillings, you can now be able to pay in installments at a little interest. Now, our challenge to the banks is to make this more flexible because they should be able to increase the number of installments and probably even relook at the interest given the high need for insurance. The second, and this is what we do at AAR, based on a customer's credit history, we are able to allow, say, 2 installments in the same month, and just depending on negotiations, it can go a little longer. But that is basically based on a customer's credit history. We are aware that some religions do not allow payment of interest, so to speak. So we are also oblivious of such instances, and we listen and we are able to give good consideration. In terms of the modalities of how this payment is done, we have digital payments, which makes it very convenient for you to be able to pay from wherever you are. And just as a last point, the issue of payment is so serious that we are even now beginning to look at some in-house solution where we have some partners whom we are discussing how we can be able to dispense those premiums on behalf of our customers at an affordable, very low interest and favorable installments. SMEs are very interesting. There are SMEs that derive their incomes daily. There are those that would like to pay weekly. There are those that would like to pay monthly, biannually, or even annually. So we really need, and I'm saying here there is room for improvement on our part. We really need to sit and look at what is convenient for particular SMEs. So I would say work in progress in as far as bringing convenience or payment is concerned, but there is a way out in terms of the various methods that I've shared with you.
Angie, I'll now come to you on our next question. Access to finance clearly remains a key challenge for SMEs. How can insurance be better integrated into financial literacy and capacity building conversations to strengthen the resilience of SMEs, especially because even as we've had this conversation from the beginning, there was a point that was raised about either the lack of awareness of what's in the market or just the lack of financial literacy for some of the founders or owners of businesses?
Thanks, Torian. On my part, I think that the fact that discussions about insurance are generally excluded from financial literacy capacity building sessions is a bit telling. I think it kind of speaks to the general attitude that thinking about risks is a preserve of credit officers in banks or maybe the underwriting teams in the insurance companies like my colleague James. It's all their preserve. But like I said earlier, an SME is both a bundle of risks and a bundle of opportunity. And given that the SME owner can be the biggest source of risk, my question is, shouldn't we take education or awareness about risks a lot more seriously? And shouldn't we work a lot harder to mainstream the idea of risk management to all SMEs? Now, I have this to say. Even if the SME chooses to manage their risks without taking insurance, because some of them, of course, will do that, because I think there are basically 4 ways of managing risk. Once you're aware about the risk, assuming that you're aware about the risk, you can decide to accept the risk and live with it. You can choose to avoid the risk. You can choose to reduce the risk, or you can choose to transfer the risk. That's where the insurance companies like AAR come in. Insurance, of course, is a risk transfer mechanism. So what I'm saying is, even if they choose to manage their risk without taking insurance, they still need to know, or they still need to have a way of being aware that we are exposed to these risks. And they also need to know the best mechanism of dealing with those risks. Maybe you've accepted a risk that you should have transferred, or maybe you've transferred a risk that you should have accepted. So yes, any intervention that helps SMEs to manage risks is good. And I think banks and insurance businesses should take the lead in driving this, because risk management is also their core business. They have a lot of experience in that, and that knowledge transfer can easily be transferred to the SMEs that they serve. That, I think, is a conversation to be had. Terian?
Thank you so much. And you do point out some really incredible points. I hope within the room we've got stakeholders within the ecosystem who can begin to make changes on that. So thank you so much. James, will come to you now. The data shows that 59% of SMEs are not considering any new insurance in the near future. That's quite a bleak prediction there. What insights can you draw from this hesitancy, and what shifts are needed to reframe insurance as a growth enabler rather than a cost?
This is indeed a big concern, and it speaks a lot to awareness, like we have spoken about. It speaks maybe to affordability. But I'm here asking myself a few questions. The first is, are they deriving any value from their existing insurance products? What is their current experience? It's very important for us to be able to measure that. And we have the customer satisfaction or service index that we do on a quarterly basis that really informs us where our customers really are in terms of the experience that they are having. And this has given us an opportunity actually to do cross-selling of products to our customers. For example, we are seeing an increasing uptake of our personal accident covers. More concerning is that the SMEs appear not to be too aware about the kind of risks that businesses are exposed to. And if I can cite a few examples, we have political violence and terrorism covers that comes in very handy whenever we have these political activities and even terrorism when it comes. And those things can be defining. They can actually bring down a business that has been built over the years. Insurance is also a very good way of cushioning inflation and rising costs. And I want to explain that a little. If you buy a medical scheme today worth 20,000 shillings, whatever changes go on in the hospitals, whatever prices are changing there, you are not affected because you paid your premium at the beginning of the term. So there will be no change. Insurance cushions against inflation, against rising costs. We have a lot of social things that come to us. Sickness is real. There are new and emerging diseases. We have cancer coming up and even other more complex diseases, which we are increasingly putting under coverage, right? And where it's not directly covered, especially as a corporate or as an SME, you can even negotiate and have those new and emerging diseases covered. It gives you the peace of mind knowing that whatever happens, my dignity is preserved, my privacy is also preserved. I can go to hospital in my own privacy, right? So, very key. What about cyber risks? These days, we are living where there are so many cyber risks. And at AR, we have now those solutions that can be able to cover you in the event of any cyber risk coming your way. As we speak right now, there are weather warnings along the coast where we are being told that even the beaches, I think, are closed because there are strong winds that are anticipated, storms and what have you. Imagine those businesses along the coastline. What if they were all insured, knowing very well that even in terms of weather extreme, that the business is well taken care of? And a few months ago, we had floods in this country, and they wreaked havoc to a lot of households and businesses. Occasionally, we have our droughts. We have seen wildfires in different parts of the world. Let's protect these risks. It can be done. We don't need to be too worried about what we are going to do if these risks come to our business. Let's cover them. In today's world, we are seeing an increasing level of people going to court over the various issues. So we call that liability classes. And I want to give you a very practical example what the law says. The law says that if an employee is injured or dies, the premises of your business is employed. If they don't have a cover called Workman Injury Benefit Act, then you are liable. The court may decide that you pay up to 96 times the monthly salary. That's what the law says. So this means that if you are paying that person 50,000 every month, the court may actually rule in their favor and pay 10 million Kenya shillings. Why not transfer that risk to insurance? What about data protection? We are seeing a lot of things emerging from that act. Why not protect yourself? The challenge is both ways. The challenge is on the insurers, like ourselves here, to continue creating more and more awareness, to go to where the SMEs are in a language that they understand. And I would also want to urge the SMEs also to really increase their appetite to be able to do this transfer to the right owners of this.
Thank you so much, James. Kithinji, from your experience working across sectors, are there particular industries where the insurance gap seems to be more pronounced? And what should providers be doing differently to plug those gaps?
Thanks, Terian. Sure. The straight answer to your question is yes. And from my experience, the agribusiness sector tends to be treated like the ugly duckling when the insurance industry, especially those who are participating in agriculture in primary production. Here we're talking about farmers, dairy farmers, crop farmers, and such. And of course, I think it's because the stakes are a bit high. But there are also other sectors like extractive industries, like mining or something like that, or quarrying or something like that, that tend to be avoided like the plague, maybe because they have a big potential for environmental damage and maybe things like public liability. But I think in agriculture, there is room to incorporate advanced technologies like AI to help insurers, underwriters predict risks and also their impacts. The idea that I have in mind is to introduce what I would think should be called dynamic pricing of risks. But insurance is also not just about pricing of risks. I think some risks can be managed without costing them into overall premiums. To go back to the idea of dynamic pricing of risks, for instance, if I have a farm, maybe tomato or chili or something like that, and the assessment of risks predicts that the next big flood is coming after 5 years or 500 years for that matter. So why should I, as maybe a farmer, be made to pay for a risk that is coming after 500 years? Which is why I think that idea of dynamic pricing of risk can be a concept that the insurance companies can adopt, especially to work to support those who are in the agribusiness sector. Remember, our economy is 25% driven by agricultural sector. The other thing is some risk can be managed without being costed. And I think what I'm trying to say there is not every risk should be priced. Some risks maybe should be managed. For instance, and James has alluded to that, what if we educate our SMEs that if you just, for instance, go for vaccination or if you jog every morning, you have a better chance of living for an extra 20 or 30 years. So that when you've managed to, you've shown the SME how to manage risks without necessarily pricing that risk into your premium. So I think bankers and insurance need to know that it's not cut in stone, that all risks should be priced, especially around the agricultural space. Some risk can be managed without being priced. Bankers will price that into interest rates. And of course, the insurance will price that into their premiums. So that's my general point, Terian.
Thank you so much. We've got a couple more questions to cover. So James, I'll just quickly come to you on the issue around digital tools, which are gaining traction. About 83% of SMEs expressing satisfaction when using online platforms to manage their policies. How is AAR Insurance leveraging digital innovation to enhance access, affordability, and customer satisfaction among SMEs?
I must say that our insurance is quite strong in terms of digitization. And what we do is to look at the whole value chain in terms of acquisition of the customers, how we contact them, where are they, how do we contact them as we observe data protection and other elements. We work very collaboratively with our intermediaries to ensure that on that part of acquisition, that is going on very well. So for that, we have already developed a platform that our intermediaries use, and it's called Wakala, and they are able to contact, let me call it the market from that platform. Now, what happens when the customers come on board? So we go now to the onboarding process, and we have also made it quite easy to onboard our customers, especially where there are no declarations. There's no need for other medical tests in terms of medical insurance. So the onboarding process there, we have also really improved our turnaround times. So it's very possible for you to get a policy document, which used to take a very long time before. You can actually get it the same day. There's no further information required. We have also digitized our payment process. You can now pay through various digital platforms. We collaborate that with, of course, with the telecoms and the banks. And our underwriting also is very digitized. But let me enhance a partnership that we have. We have a partnership with the MTBA platform, which now helps us to do our claims management quite efficiently. And here, it's interesting for customers because they are able to follow up on their benefits as they claim. So you get your notifications, you exactly know when you visit a hospital, how much you have spent and the like. So you get reports, and your right to reports is there. Let me say also that, like I've said before, at every instance, through digitization, we also measure your satisfaction. So when you go to the provider, you are able to rate and describe how the experience was. And this helps us in the back end to be able to continue improving your experience, because that forms a lot of the meetings that we continually have internally.
Thank you so much, James. Kithenji, I'll come to you now. We'll touch on global best practice or some models that perhaps stand out. And of course, Wild has worked with global partners to support entrepreneurs across the continent. Could you tell us a little bit about some international models that stand out when it comes to building trust and uptake in SME insurance?
We know that, at least in Kenya, 80% of insurance is sold through intermediaries. It's probably important to engage the insurance intermediaries because they're the ones who interface directly when clients are not buying insurance online. Of course, it works through intermediaries. So those are very critical people in terms of two areas. Remember, I earlier said that these SMEs are bundles of risks and opportunities. From one standpoint, then, it follows that the SME owners are risk managers by default, whether they want it or not, because they are running a business that is full of risks and full of opportunities. And my point is, SMEs need to manage risks, whether there are third parties available to support them or not. And here I'm talking about insurances and insurance companies and the rest. We're saying SME owners are risk managers by default. So whether there's somebody to support them in that area or not, they still need to manage their risk. So the question we should be asking is, these people who own bundles of risks in the name of SMEs, why are they not taking up risk management products? Now, when they come directly to your question, I think insurance can do a better job by taking time to understand the business models, especially the representatives. I alluded to the fact that 80% of insurance is probably driven by intermediaries. Now, those intermediaries can do a better job by taking time to understand the businesses that they're dealing with, or the business models that they're dealing with, and the kind of decisions or decision-making processes that the owners apply to run their businesses. Now, with that, it will be a lot easier, for instance, to prescribe products that actually align with the business models and actually align with the risk appetite of the owners. That's what I think should be happening, and that's probably the best practice. I think mine is in form of a question. Why aren't you using our main channels of distribution who actually interface with the SMEs to help the SMEs become better risk managers?
The challenge is on. Hopefully, when we do have this conversation again, then we'll have some more answers. And Have us now take our last questions, which will be also forward looking into what the future looks like and your sort of projections. We'll start with James. As SMEs evolve, so do their risk profiles. How is our insurance thinking about the future of SME insurance, and what innovations can we expect as you continue to strengthen your offering in this space?
Fortunately for our insurance, we are very strong in maintaining relationships with our SMEs and generally our customers. We have a very high retention level. The customers who come on board, we rarely lose them. In fact, they grow organically. I want to give you an example. There are many SMEs within our book that have gone ahead and converted into corporates over time. And it is because of the service that we provide to them. And it's just good to take a proactive approach, listen to them, visit them regularly, and listen to what needs they. But generally speaking, we keep abreast very highly on emerging issues, saying the new diseases which I was mentioning. We have chronic management programs just to ensure that even these very tough diseases, we're able to deal with them. Wellness programs so that, again, we proactively manage our health. We don't need to wait to be sick. There are things that we can be able to do to prevent us from being sick. On the general insurance, we already dealing with the cyber risks, with data loss, these extreme climate change issues. So we are continuously looking for even better staff that are employed in the organization. There's a lot of opportunity for us, even as staff, to continue embracing and learning what new risks portend around the world. I liked what my friend Kirinya said about being able to predict what kind of risks that we can be able to foresee. So we are in that space, and I can assure you that Aon has a very solid management and staff who are continually looking for the best interest of our customers.
Thank you so much, James. So we'll now wrap our conversation with a comment from Kithinji, a forward-looking one. Kithinji, looking ahead, what role can ecosystem players play in building a more risk-ready and insurance-aware SME sector in Kenya?
I think based on what we discussed so far, it's becoming clear that if entrepreneurship support organizations and anyone else who supports SMEs need to take into account risk management thinking as they support their SMEs. Like we said, the SME owners are by default risk managers, whether they like it or not. So the only difference is whether they are doing it right or wrong. So we need to take that seriously as we support the enterprises. Now, that's not a very common approach as far as the entrepreneurship support organizations are concerned. But as while we are committed, as we work through the consulting support that we give SMEs, it actually enables us to identify fundamental risks, like the ones I alluded to a little bit earlier. Are you actually doing the right thing? Are you solving the right problem in the market? Is the market as big as you think it is? Is your value proposition fit for purpose? So some more fundamental things that relate to the business model. Now, what I'd like to say is that most interventions, they focus on access to finance, business model canvas, financial management, and things like that. Very few of them have that framework or mindset that for me to be able to support this enterprise to succeed, I also need to think about the risks that are inherent in the enterprise, the risks that are inherent with the business owner in terms of how they make decisions. And I also need to take seriously some risks that the business owners have no control over. So I think what I'd like to say is we need to embed and mainstream risk management as we support our enterprises.
Thank you, Kithinji. If I may take a minute or two of your time, both James and Kithinji, to respond to this question, and then we will call it a day. We've got a question from Catherine Waithera, and she says the point on risk education, especially for SMEs, is very important. Too often, risk has been skewed to the finance and revenue function. What can be done to bridge this risk gap without getting into too much insurance jargon? We will start with James, and then we'll wrap with Kithinji, and then we'll call it a night.
Thank you, Catherine, for the question. what we are doing tonight, I think, is a very good example of how we can be able to expand education in risk for SMEs. I also want to say that we have found it very beneficial when we partner with SME organizations from different sectors, when we sit down, and different sectors will have different kinds of risks. We sit down and we're able to just analyze and discuss potential areas, risk management. So what I will say, Catherine, is that we need to increase momentum on what we are doing. We need to have such forums more. We need to go much more to the public. We need to look for affordable ways of communicating what insurance is all about. And one interesting way also would be to go to schools, to colleges, and create risk awareness from that level. So a lot can be done. And I continuously see efforts even from our regulator, IRA, going to different parts of the country to create awareness on what insurance is all about. But yes, Catherine, a lot of opportunity for us to be able to simplify our communication. And I've always said that even for entrepreneurs, let's have fun and create maybe policy documents, and even in our local languages, so that people can be able to read and understand what really we are saying in the small print. I agree with you, Catherine. A lot more needs to be done.
Thank you, James. Kithinji?
I can add very little to what James has said, but maybe my focus will be on the simplifying things like terminology, simplifying, because one of the biggest barriers to getting any concept is the terminology that we use. And then secondly, it's how the concepts are communicated. Would it be better to use visuals? Would it be better to use lectures or something like that? And then again, the thirdly is to find a way to make the communication a little more continuous, not once in a while. Say, for instance, we have the insurance week. That's the only time you get to know about insurance. What is happening the other 364 days of the year? So a more targeted communication plan for me would help. But at the end of the day, what I need to hear as an SME owner is you need to make me understand that I'm actually a risk manager, how I can identify the risks in my business, and what I should do when I identify the risks, and also the sources of risk. That's a good place to begin, Terian.
All right. Thank you so much to our panelists. I'd like to thank our audience as well for not only making time to come in early, but also sticking through the conversation, quite an enlightening one. So thank you so much to our panelists, James Kamal, who's the Group Head of Distribution at AR Insurance, Director of Strategy at Wild International. And today we aimed to unpack the realities behind low insurance uptake among SMEs in Kenya. And we also got to explore how providers and the ecosystem as a whole can better align insurance solutions with their real needs. I'd like to say thank you to everyone, to Mwango Capital for hosting us, and to our panelists, to our insurance, and to Wild International. My name is Terian Chebet. As always, it's been such a pleasure to host the spaces. Good night and God bless you.